Hi, I'm Jack Chellman, and welcome to the Impact Report, a program from Next Gen Planners and the Global Returns Project. We focus, as you know, on the intersection of financial planning and our planet. We cover a whole host of things, sustainable investing, ESG, and beyond. And we have a particular interest in charitable giving or philanthropy. That's because charitable giving really matters for our planet, and because the research says it really matters to clients too. So, welcome to episode 8, where we're digging into sustainability in particular. And the topic we're discussing is that even when clients ask financial planners about ESG or sustainable options, their intentions aren't always 100% clear. What do clients want to achieve when they ask about sustainability? If a client is looking to deliver positive impact for the planet, how can a financial planner actually coordinate those conversations? So I'm going to have two guests today to start off our conversation with some insights into client concerns. I'm happy to say that our first guest is David McDonald, founder of Path Financial. Hi, David.
Hi, Jack.
Great
Thank you for having me.
Yeah, thank you so much. I wonder maybe you could start by just introducing Path Financial to the audience and saying a bit about how sustainability fits into the services you offer clients.
Sure, I'd be delighted to. I think Path Financial is, if not unique, fairly unique insofar as that we were set up very much on purpose, for purpose. The idea being that we wanted to have a business which puts sustainability front and center of everything that we do. I came from a background, I suppose you would call it capitalism red in tooth and claw, and I think that hasn't served people or planet particularly well from a sustainability perspective. I mean, yes, we can talk about wealth and incomes having increased, but at what cost? So we're quite a new business. I had an epiphany about 5 years ago. I realized that a lot of the money that we had been putting client investments into were, well, destructive from a people and planet and sustainability perspective. And I just, one day it really hit me how impactful negatively that was. So I sold that business actually with a view of just trying to stop me being a damaging entity to the planet. But then I was confronted with, well, how do I actually invest this money in as positive of a way that I can? And that's what introduced me to the world of what we call impact investment. So rather than just avoiding the negative, trying to invest in things that are positive for, well, I'm going to say earthlings and planet rather than necessarily just people. So yes, with that idea in mind, we set a business up which only invests 100% of client funds in what we call impact investment, and we've set a system up such that we think we can take 100% wallet share and actually deliver something which has adequate diversification and is as, well, I'm going to call it as dark green as one can get, whilst still having a functional investment portfolio.
It's a great model, David. And believe it or not, I still hear from advisors and I read about advisors who say, well, my clients only want to make money. They're not interested in any of this distraction. They just want as much money as possible saved up and accumulating. And I just wonder, does that chime with, I think I know the answer, but does that chime with your experience with clients, or are they looking for something more?
I think people find Path Financial particularly because they do have sustainability front and center of their world, and they're trying to think of ways in which they can, I suppose, minimize their carbon footprint or maximize their positive footprint on the planet. So just looking at some client notes from a new client the other day, and he has financial return third on his list of priorities after sustainability and reducing hassle for him personally. That said, it's been an interesting 4 years since we set up. The business was launched into lockdown one, and we thought we'd found the secret to alchemy. Actually, for the first couple of years, investment performance was tremendous, and the traditional investments of, I suppose, fossil fuel and what have you, which are considered negative, went down. And there's been a somewhat of a reversal of that over the last couple of years. So, but I would say, actually, I don't think that trade-off necessarily has to be a thing. And the data from 5 years to 10 years, as far as we've got it, seems to suggest that there's somewhat of a slight positive correlation to better ESG scores, if you will, use that measure, mapping to better financial outcomes for investments. And I think certainly if we look at some of what I call the dinosaur industries, which have to adapt or die, they're not going to be really what you want your long-term investments in for any number of reasons.
Absolutely. And I guess, David, if a client, when you're meeting with them the first time or when you have your annual review with them, and they say, I'm really worried about climate change or biodiversity loss or any of these other environmental emergencies, what do you think they're actually hoping to achieve? What in their mind is the impact they want to have?
Well, I think the impact that they would want to have might be actually somewhat bigger than impact investment in its current guise can deliver. That there's only so far that one can go, and it's a very nuanced and difficult space to be in. So, for example, taking fossil fuels as an example, that's an area where I would say 100% of our clients don't want to be in. But actually, if you could take a fossil fuel company and through the power of money, pivot them into being a renewables company, for example, there's probably more impact in doing that than there is in investing in someone who's already been on the journey. So this whole thing's in its infancy. I think the Global Impact Investing Network estimates, there's like $1 trillion or something invested in this arena, which, okay, that's a chunk of change, as we call it, but it's a fraction of a percentage of the available capital in the market. So I think many of our clients see themselves as early adopters and innovators, and they want to be at the forefront. And this is going to sound very grandiose, but of repurposing capital, I suppose, as more of a force for good rather than just having the consequences that we've seen over the last century or so.
And David, I find that really interesting that you say that some clients might be thinking of things that they would like to do that maybe even beyond an impact fund itself, a little bit beyond that. I know that Path incorporates charitable giving on the climate and the nature side into your client offering. And I wonder, why have you chosen to do that? And also, is that connected to trying to help clients get a little bit beyond what a financializable solution might be?
Very much so. I think the question gives a hint to the answer. There's only so far that capital can go in helping with sustainability issues. Now, it so happens that we have found the first investment I've come across, which actually can make a financial return from sustainability, which is a bond issued by the World Bank called the Rhino bond. And it's the first time I've come across conservation being something which can create a financial return. But that's a tiny investment in an obscure fund. So these are hard investments to find, and even then the impact is very limited compared to a client's overall wallet share that they would have with us. So I think where sustainability and where Global Returns Project in particular comes in is to sort of gap fill, I suppose, from what we can deliver from impact investment and where the client would like to be. It's so much more impactful to use those pounds through the philanthropic route than to wait for impact investment to start to have some of the impacts that maybe might do in the future. So we've been delighted to partner with Global Returns project, and we've had some really valuable conversations on the back of it. And it seems to me that it's the perfect sort of add-on to an impact investment strategy.
I guess last question for you, David, is a lot of people associate philanthropy with the billionaires of the world, and they say, "Well, I can't really do anything charitable unless I'm in that bracket." And I wonder if you have any thoughts on who philanthropy is for and who can be a philanthropist in that way.
Mm. Well, I bet you that the level of charitable giving amongst poorer people is a much more significant portion of their wealth than many of the billionaires out there. Even billionaire philanthropists come to that. There's some very notable exceptions, obviously. But the way that Global Returns Project is set up is extremely accessible to clients. We work in the financial services industry on this sort of what we call ad valorem model, which is where fees and charges and deductions are taken as a percentage of the client's fund. Typically, that's the way that it would work. And that can be aligned to the way that the philanthropy works as well. So it's very simple to set up, either a percentage-based or a pounds per month based gifting program. So it seems to fit very well with the financial services model, and especially when there's a sustainability discussion, it's just worth reminding clients where philanthropy can be something which is part of a lifestyle, in the way, in fact, that many religious organizations will set that up. Well, it can be quite normal.
Absolutely. Well, thanks, David. That's a lot to think about, and really grateful to speak with you today.
Well, thanks for having me on, Jack. Pleasure as always to speak.
Perfect. Our next guest is another David, this time David Barks from Savanta. And we're going to be discussing Savanta's research into high net worth individuals and other interesting client research and what they've found regarding sustainability. So hi, David. Thanks for being with us.
Hi, Jack. Thanks for having me.
Excellent. So maybe, again, a good place to start would just be an introduction to your work and Savanta.
Okay, so Savanta is a full-service market research agency based out of London, as well as the US, and a few offices globally. We do full-service research, so we investigate any topic for brands of all shapes and sizes. But me personally, I'm a senior director within the Wealth Practice Group, and our work and what we do is really, we're specialists in researching the wealthy from all kind of angles, thinking about them holistically, both from financial, from brands, and kind of their giving, and all kind of aspects that can touch their lives.
Fantastic. And in researching the wealthy and developing that expertise, what have you found around wealthy people's, maybe high net worth individuals' interests in sustainability in particular?
So a lot of what we do is bespoke to the organizations that we work with. So, they've got particular objectives and things that they want to find out that we just research and kind of look into. But we do some research ourselves off our own back, and we have a millionaire omnibus called Millionaire View, which we run on a quarterly basis, and people can buy questions on. And one of the ways that we've used that recently is to actually develop our own sustainability segmentation, which looks at how the wealthy think about sustainability in kind of all aspects of their life. So not just their investing and their giving, but in a lot of their purchases that they make as well. And some of the really kind of interesting things around that is that in the UK, at least, about 20% of the population in the UK we've labelled as defiantly disengaged. So they're people who are just not interested in sustainability, and they would probably be best characterized as kind of thinking of it as like a woke agenda and something that just doesn't touch them. They're kind of older people, they're retired, they're more male. So there is a big proportion of the wealthy population that just don't care about sustainability. However, that leaves a very, very large remainder of the population of wealthy people who do care about sustainability and think that it's a really important aspect. But one of the kind of big things that we came across in our research is that only one of the segments was really doing something, in detail around sustainability in most aspects of their life. And we call those people committed change makers. They're really keen to make a difference, and they're doing a lot with their money every day in kind of the financials. They're making, big decisions about how they invest and kind of what they do. And they bring their values and their ethics and sustainability into those discussions positively. It's kind of them leading the conversation. And, they will, make very significant choices in how they travel, in how they buy, in what they consume based on those values. So you've got, really 10% them into it. But what that leaves is several other segments that care about sustainability, but aren't really doing as much as they could in all aspects of their life to bring that to the fore. So they care about it, but there are barriers to doing something, to engaging with it on a day-to-day basis. And as you can imagine, like some of the barriers are effectively that we have one segment we've called empowered individualists, and they're entrepreneurs, they're really busy, they've got great lifestyles, they travel a huge amount, and they want to maintain that lifestyle. They want to kind of enjoy the life that they've got, but also recognize that it's a big part of their lives, that it's there. Sustainability is there and it's in the background, but it's not coming through. There are other segments that are it's wait and see, and other segments which are it's a bigger problem. It's just a bigger issue than they themselves feel that they can contribute to. And I think that goes back to your previous guest in kind of saying thinking about philanthropy and that being, for billionaires and top end, it's that there's a lot of wealthy people out there who do believe that they themselves can't impact in the same way that they might be able to on other aspects of their lives.
Well, that's a great segue, actually, because what I'm also interested in is, has your research shown anything around interest in philanthropy or even sort of interest in advice on charitable giving? Because you've just said, interestingly, that perhaps they don't feel now that it's something that's for them because there are some preconceptions around it. What's the interest in some advice on charitable giving?
So philanthropy is definitely a relatively scary term for people. There's a lot of, it is a thought for billionaires. It's kind of people that can build a hospital or a library or, commit really significant sums of money that a high net worth individual, somebody with millions, just can't think of in the same sense. So you do have that kind of quantum of difference. So philanthropy is often thought of in those terms. Charitable giving is something that high net worths do all the time. But typically people will donate from their income, not their assets. So proportionally, it looks really small in comparison to the assets they've got. But it's still a relatively significant proportion of their income. And those really large donations are when it's kind of something that they really, really engage with, and it's often kind of freed up in gifts and wills and things like that. But they do happen; they just don't happen every day, because assets are often tied up in financial investments or property or businesses. We do work with an organisation called Beacon Collaborative. And what we found with them is that since 2020, both the median and the average levels of giving from high net worths has increased significantly year on year. So, since the pandemic. And the median is kind of really important because that can vary a lot based on kind of major gifts. And there were surges in those major gifts through waves of COVID, through the start of the Ukraine conflict, and when the cost of living crisis kind of really escalated. So from a UK point of view, that is kind of really important to think of. And one other thing that we picked up with that is that female donors do lead a lot of the larger gift giving. And they tend to give larger amounts than men, and younger donors are kind of more active. They kind of do more varied charitable giving than their older counterparts.
That's all really interesting. I know that your work spans different geographies, David, and you've looked at this in different countries. I wonder if there are any interesting insights when you bring geography into account here.
So we did exactly the same segmentation work in the US as well, and one of the big things about the US in particular is that philanthropy and charitable giving are just really embedded in kind of what it is. But it's not just that; it's that entrepreneurship and wealth generation is actually something that's recognized and celebrated a lot more in the US compared to many other parts of the world. So that combination of those two things, you've got higher profile, wealthier individuals in a lot of ways in the US, and an expectation or it's just seen as a less optional activity for the very wealthy in the US. So philanthropy and charitable giving is just more part of an everyday life compared to other parts of the world. That's kind of hugely affected by around in other parts of the world by the political and societal cultural kind of aspects that are there as well. So in Europe, it's often kind of under the radar quite a lot. People don't like as much publicity around their giving. Socialism in France, for instance, is really embedded. So there's kind of more engagement in government and persuading the government to do more around issues such as sustainability rather than individual giving. And in the Middle East, it's religion that does an awful lot of the giving. Organization, the kind of charitable aspect of religion in the Middle East is huge, and so that's the kind of one of the key differences. But going back to that segmentation that we did in the US, what we found there was that there are really more defiantly disengaged people in the US. So that as you might expect from everything you hear about the US with regards to sustainability, but it's still not everybody by any stretch. And there are just as many committed change makers in the US as well. So it's a slightly more polarized world in the US when it comes to the issue of sustainability. But one thing we do really think is that just globally, we do expect to see more donations towards sustainable choices and sustainable causes over kind of future years, because there is currently, and there's going to be a huge wealth transfer. And one of the aspects of that is that next gen wealthy individuals, both inheritors, but also entrepreneurs, they travel a huge amount, and they're more keen on experiences and kind of seeing things. So they experience and see the impact of climate and poverty in different countries a lot more. And, we think that they're a lot more attuned to that. So over time, there will be more wealth from these individuals going towards sustainable choices because it's just more front and center for them.
That's really interesting, David. And thank you so much for providing the sort of statistics that undergird a lot of these really important questions around, what are clients looking for on the charitable giving side, on the sustainability side? You have to have the research. So thank you so much. And thanks for your time today. Well, thanks again to both Davids for joining us for this 8th episode. And thank you, of course, to everyone who's tuned in to join us as well. Want to say, please do join me at the Next Gen Planners Sustainable Investing Conference, which is happening very soon. And we'll be able to have these conversations live, or if you're tuning in virtually. For more information about the conference, I'm sure you can go to the Next Gen Planners website or get in touch with one of their team, and hope to see you there. Finally, this program is co-hosted by the Global Returns Project, which is a UK charity helping financial advisors and wealth managers offer clients high-impact climate and nature philanthropy or charitable giving. If you'd like to learn more about how to work with GRP at no cost to you or your clients, please do get in touch. My email is jack@globalreturnsproject.earth. Thank you.